Hey, welcome back to Trade and Wait. First things first, I want to apologize for being missing in action for the past month or two, almost 2 months now. Um, Apologies for that. I'll try to be more consistent. I also would try to reduce the length of these videos substantially, and have more concrete discussions, more robust discussions going forward. What we do here on the channel is predominantly utilize ICT concepts in order to read price action and look for setups. And in these past 2 months, I've been trading a lot better, much more professionally. And I think that lends well to focusing only on one setup. Focusing only on one setup. And I think the good news about focusing on one setup is if you focus on the market maker buy and sell model, this is literally multiple setups in one. So that includes the OTE entries, that includes the ATM strategy, that includes your 2022 mentorship, that includes the ideal of purge and revert. And even this here, if you treat the 4-hour or 60-minute as your daily chart and study 5-minute structure, a whole new world opens to you. Test it and see it, and with that you can literally trade power of 3 on the 4-hour time frame or the power of 3 on the 60-minute chart. So aka you can literally just trade candles. You can trade it, even the 15-minute. You can trade a 15-minute candle as well. And I think all of that is based off of what do you consider to be your higher time frame, right? What do you consider to be your higher time frame? And that would be to some degree here, right? So if you are like the day trader, the scalper, 1 hour can be your high time frame chart, and the 15-minute could be intermediate time frame, or it can be your trading time frame, your shorter term time frame, whatever. You don't necessarily have to drop down to the 5. You don't necessarily have to drop down to the 1. And as you know, as a scalper, you can literally utilize the 15-minute chart or the 30-minute chart as your high time frame. In this case, in my preference, 15-minute for scalps, 15-minute as a high time frame, 5-minute as the intermediate, and the 1-minute as a potential trading time frame. But I personally prefer staying on the 5-minute. And my favorite time frame is the 4-hour. And my favorite or go-to setup is the OTE setup, or the 2022 mentorship model, which is still to me an OTE setup in many ways. And sometimes, again, it doesn't pull back to the optimal trade entry level. It just pulls back to 50% of the range. And in that case, there should be something there to give me an indication that price may not go to that optimal trade entry level, and just kind of, it should be like a PD array there. Predominantly, I deal with fair value gaps and inverted fair value gaps. But I see breakers, I see order blocks, I see mitigation blocks, I see propulsion blocks. Doesn't matter. I'm not trying to throw everything into the setup, right? The system, you have to develop your own trading system utilizing these concepts, and the more that you try to push everything into one setup, the more you're going to fail, or the more you're going to have more inconsistencies in your trading. And that includes trying to include too many time frames in your analysis, right? Weekly, daily, 4-hour, 1 hour. It's great. It's good. And also another point is that a lot of the advantages to trading, to me, happens outside of the market. Literally outside of the market, when you're planning your trades, when you're looking for opportunities. Because what you don't want to do is look for, right, make up trades while you actually are in a trade. right? So your trading plan, your patience, those seven fundamentals of one good trade. Most of these are outside of the market, right? Proper preparation. That's even the examples they gave is mostly literally all outside of the market. You're not in any live trades. Hard work, you're literally just looking for the setup. Still not inside the market. Patience, waiting for a good entry model, fighting for the right price, not just jumping in because price is moving. Right? You gotta think in terms of R, percent R, as I say, or R measurement. In this case, it says a good entry is essential for a good risk to reward. Right? Thinking about expected value, all of that's here. So 3 of the 7 so far is you're not even in a trade yet. Detailed trading plan still for the stock trades against you. You need to know all of this before you get into a trade. And you should have like a strategy that you have identified edge in already. So even this, the detailed trading plan outside of the market, all 4 of these. Discipline. What do you do if your stock trades against you? All of that is part of your planning, right? So literally most of the fundamentals, if not all of them, are outside of the market or just before you enter, right? Hard work waiting for your right entry, patience waiting for your entry, patience with yourself following your trading plan, not someone else's. The discipline to stick to your rules and not break them. All of that's, you have to be consistent with the style your style of trading and with who you are as a trader. And even with that, you should sit with your trader identity before you decide to trade. And part of that trader identity again goes back to this. Are you day trading right now? Are you scalping right now? Right? And you don't necessarily have to be a short-term trader, meaning holding trades for 1 or 2 days to utilize a 4 hours or higher time frame, because you can trade the power of 3, right? The formation of a one singular 4-hour candle, right? And that same thing works there. Open, high, low, close, open, low, high, close. In bullish situations, open, low, high, close. Which is also in regards to the power of 3, it would be accumulation, manipulation, and then distribution. So it's a lot of chatter, right? And just talk my head off just now, talk your head off. Apologies. But I think all of that's relevant. A lot of the things, like I'm teaching people let you know how much you know, right? And I was teaching someone recently, and I'm like, you see the gap? You see the gap here? And she's like, I don't see the gap. And I'm like, it's right there. Like, how can you not see the gap? And I had to slow down and say, wow, right? Like, I was once there before, and you just have to like take a step back and see, right? Gaps on 3-bar patterns, swing high, swing lows are 3-bar patterns. It's just like second nature now. And I think sometimes you have to realize that just like in the martial arts, it's not necessarily the fancy moves that get you a win or get you out of situations. It's literally executing the basics or executing your go-to move with some degree of precision that's going to get you where you want to be. Anyway, 4-hour chart this week looks like it's range bound, right? So first things first, I want to say the narrative is where so it's one narrative too tiny, right? Where is price coming from? Where is it going? 3, How will it get there? How will it get there? Come on, bro. Lock in, right? So that's what we want to focus on prior to entering the trade. It's a 4-hour chart, and again, it's loosely based off of this and this quote here. Creating the 4 hours as your daily chart. Oh, I had some audio I wanted to play and let you know that, hey, actually you don't need to know the daily bias. You can actually you're able to identify intraday liquidity or the next draw on liquidity. Intraday, you don't necessarily need to trade in the direction of the daily bias. So here is ICT. I tend to call him sensei since you know, very often in regards to the art, the technical science of trading, put respect on his name. Everything else, good or bad, I don't care. Like, to be honest, I don't care. It's exclusively a business transaction, right? So anyway, here we go.
We took out what here? A short-term low, meaning what? We have a shift in market structure that's bearish, counter trend. So this is what I mean by traders that use my information. You can be buying and selling in the same day, where one trader may be doing primarily one direction within a daily bias. But you can trade without a bias if you understand what liquidity is likely to provide in terms of the next draw. Small little fair value gap, it trades up into that, delivers.
All right, there's that. That could be found on ICT Gems. The title of the video is How to Trade the Final Hour Macro, and that will be the 5 minute 11 second 5 minutes 11 second mark on that clip there. Anyway, I didn't show it because I don't know how that works, and I don't want to get my video taken down because I showed some other stuff that's not my own. So but ICT says he doesn't have a problem with you do it with his voice and those Twitter spaces. So when it was a Twitter space. So there you go. All right, so boom, right? We wanna, how much time we have left? All right, it's 12 minutes 30 seconds. Let's see what we can do here. All right, so first things first, where's price coming from? For me, I want to think about discount and premium. And this, we thinking in terms of the start of the week, right? Before the week started to go, we utilizing this time frame, the range that price is in when price opened up here in this area, right? That's what price was when the week started. So what's the range? It would be this swing low to this swing high. That's the range. And what's the equilibrium? I'm just gonna, you guys already know, I eyeball like everything, right? So kind of like right there, right? The midpoint. I'm gonna take this, I'm gonna draw this out, right? So that's, make that blue. And so that's also, this is the previous week's high. And this is just an intraday, intra-week swing low. But we're gonna draw it out. Make that red. Bada bing, bada boom. All right, let me just name this one. I want to say fulcrum, but let's say equilibrium. I want to say fulcrum because I like it better. So I'm gonna just say fulcrum. Fulcrum. It's equilibrium, right? Okay. So I'm gonna take this back off. So you know that's the range that price is in when the week opened. So it's kind of, so you got to think again, above this level is premium, and above and below this level is a discount. Also, inside of the range it would be like, this is internal range liquidity. This swing low, relatively equal lows here would be external range liquidity. in relationship to the range that we highlighted with this. This is also external range liquidity as well as this. But if you go like here, it broke outside the range. So then you have to factor in this range, this entire range here, if you were to consider price going further to the downside, right? But you have a false breakout here. So you have all these relative equal lows here, so close to this level. So came back down, took it out, came back up, took out the previous week's high. So with that, also we have a fair value gap here, and you can see it was sensitive, and the fair value gap is a 3-bar pattern, as well as the swing low, swing high 3-bar pattern. And you can see how price reacted to those levels, and you can go a step further and do your quarterly thing. See if it's on this time frame. Good, and we just walk that out. 265, go 275. Let's go 300. All right. As you know, sometimes I'm very playful, so use me if I'm ruffling your feathers. Get to the point, brother. Anyway, make that black. All right, so here we have, it's twofold, right? Because this was a key level here, right? This fair value gap in general sent price higher. Traded back down into it, did it again here. Traded back down into the quarter, false breakout. Or breakdown. I'm gonna say false breakout. Also running these relative equal lows here, which is key. And again, we identified the range, discount the premium of that range. And let's take this off. So this would be running this high here would be your break in market structure with this here. And running this would be a balanced price range here. As you have this low to that high, very, very tiny fair value gap here. It's violated inverted fair value gap, and you also have this ginormous fair value gap, and this volume imbalance or liquidity void. So this small inverted fair value gap and this bearish fair value gap, you can draw that out, or you can utilize just this liquidity void, volume imbalance as a key resistance level or a potential draw on liquidity here. And you can see it, right? Hopefully everything is clear. So this would be your break in, your run on stops. Here would be your shift, your change in the state of delivery, because ran stops, it dropped down below this bullish candle and traded back up into the imbalance. It filled it back up. This imbalance and into this liquidity void or volume imbalance, and traded back down into here, and then totally, so they'll see this is relevant here. I wouldn't worry about this, and this bullish one will be relevant right here. Let's just draw that out just to make it clear. Right? But obviously we have this one that was a little tiny one. And just bring that to the forefront. All right, but it's all. This is your 4-hour analysis. So where is price coming from? All right, it ran a high, and then it broke. It kind of like ran here, and then violated it. Kind of traded down into this relative equal highs here, but also it ran down below 50% into this order block. You don't trade order blocks, it doesn't matter, right? That's not your trade. But guess what? When you drop down to a lower time frame, you may see your opportunity there. Make that like, all right, so let's make sure everything carries over to the lower time frames. And that's all we have. So where is price coming from? Where is it going? So, all right. So here we have internal range liquidity. It's inside the range. Targeting external range liquidity. Came back down. Engineered liquidity. So we have internal range liquidity here. And then you have external range liquidity because it didn't, right? And it depends how you see it too. I see it as what I'm saying, right? External range liquidity below this low. Traded back up into internal range liquidity. And then we have external range liquidity again. External range back to internal range liquidity. And we have engineering liquidity here. But it's not doing anything. Didn't take out. It's just trading into an even tighter range above equilibrium of the range and the high of the range. You could have seen it differently and considered when price traded internal range, external range, and engineer liquidity, internal range, and you could have said, or you could have said external range because it's swing high, external range, and consider this back into internal range. Then you consider this running on this high as external range back into internal range, back to external range of this swing high and this swing high or this swing high, back into internal range if you still want to utilize this violated bearish fair value gap. So all depends how you see it, and that's again, where is price coming from, where is it going, and how will it get there. That would be your 4-hour analysis. That now, and that's literally how you could have traded it, right? So here again, we had that run on stops. You have your break and market structure here. It's the previous week. And we have, this is your run on stops. Break and market structure, retrace into this imbalance here, to this bearish fair value gap. And that would be your short entry there. That would be your short entry here. And this is the 15-minute for, this is why this is off, because I'm like, it's not giving me no information. The 1 hour. Technically, this shouldn't be there. This should only be on the 15-minute. Right? But it's all here, right? Run on stops, breaking market structure, price traded back here. And let's just do this. I'll do a trade entry. Short. Right? I'll do a trade entry. Short. Targeting. Target 1. Never made it here until here. And then it reversed. So, and also the ideal that Monday or Tuesday, high probability that it would make the high low of the week. In this case, we got this ugly wick coming down on Wednesday around 4 1400, 2 p.m. That made the low of the week. Thursday made the high of the week. So again, we just deal with probabilities. Nothing's absolute, but that was a good idea here to consider going short until you see some degree of exhaustion. And that is the setup there. That's your setup. Optimal trend entry short. But that's that 4-hour level. And this is your opportunity. You can still see it here to go short here. Same concept. Could have held on, never pull back into your entry. Could have held, but I don't believe in giving back. I think S&B teaches you to not give back more than 20 or 30% of your gains, and I know that is unrealized gains until you close out the trade. So let's be real, right? Let's make those gains real. And it's nothing wrong with exiting the trade, and you see it set up again, because now you have this imbalance here for this second setup short for this, right? And this is different days. So again, this is a 4-hour chart, and you kind of hold on to this for 1 to 2 days, 1 to 2, 3 days. In this case, short turtle soup here, smart money reversal. It's the first day, retracement, second day, third day, into the fourth day for the short, for the completion of the move. And then you have one turtle soup, and then you have a retracement here, long. That's your entry, optimal trend entry long here, targeting this previous swing high and hitting target 1, negative 27. And then you have a pullback again. So you have a few setups here. Few setups on different days, utilizing, and then this is just a 4 in the 1 hour. I didn't even get like into the 15-minute, which is another favorite. So the 4, 15, 5, 4 by default, I think you have to consider the 1 hour, but not necessarily. Obviously, we have 4-hour PD arrays or premium discount arrays or levels here, and there's this one 15-minute bearish fair value gap, just to show this setup here. And then, so this right here would be a completion of a market maker sell model. This, and let me see, would you see it better? Nope. I see it better here on this time frame, right? Because again, smart money reversal, low risk sell. This, and it didn't take out the low until over here. So you had a retracement here, another optimal trade entry short here, then it crawls down, another short entry here or here. And overall, if you did like of the 4-hour, you can see consequent encroachment, and it came down, took out these relative equal lows. Upper quadrant of this bullish fair value gap, held price. And let's see if we can see that entry on the 15-minute. Right, so that's the last one, holding the last quarter. And we have a run on stops here. Let's just, so you can use here. So that same clip that I played from ICT also gets into how, if like what I may consider to be a shift in market structure, you may not, right? So you may consider this to be the shift, or you may consider this level to be the shift in market structure, or the run on stops. So run on stops here. This here, I like this one here as the market structure shift. And then you have a retracement here. Or run on stops, and then you have a imbalance here, bearish inverted fair value gap here. And you can see price holding in the top of this fair value gap, this 4-hour imbalance. But you also have here, so you have this to support high prices going higher. Then you have this breaker as well, low, high, lower, low, and all of these 3 candles as a bullish breaker. So you have this pullback into the breaker, and then high prices into this 4-hour volume imbalance or liquidity void. Then you have another pullback, because this is also a break in market structure, this whole run up, and into this. I don't know if I'm like, this all makes sense to you? So yeah, there's your entry here. That's also optimal trade entry, long. So this low to this high, optimal trade entry. Bodies are respecting this imbalance. And then we have, again, we have that as a target again. It's looking like negative 27 is the thing, right? Not always though, so doesn't matter. All right, so then we have, this is the previous week's high as we highlighted. So that's a key level, high time frame level. And we have a retracement and a short situation here. And on this time frame, you can see, so we have a run on stops. We do have a break in market structure, or a change in the state of delivery rather. And you can have this order block as your key level, or you can have this mitigation block. I would utilize this because that's actually your, let me change the color. So this right here would actually be your ATM model. That would actually be this model here, right? Trading back into the first down close candle prior to the stop run. Right, stop run, first down close candle, trade it right back into it, and you target and look like engineer liquidity here. So this would be sufficient for the model, for that ATM model. Right, you see, doesn't tell you to go all the way back down here, but so you have first leg, all of this from here to here, and then the second leg. Ideally, price should kind of come back down here, but we'll see what that looks like when the market opens up. I don't know if I added value. Please let me know. I think my purpose in life is to seek value for myself and to add value to other people. So that is the goal. That is the goal. And but yeah, so I think we only use 4-hour levels and 15-minute levels. We didn't even get into divergences or anything else. Yeah, multiple setups. That's intra-week. Like it doesn't matter. Like, all right, so we covered Monday short. We didn't cover this long here. Didn't cover the long there, but you can see really a retracement, right? But it's a long nonetheless, right? Let's see. Look at you. So that's actually dirty work there. All right, so you got all of this here. You got price running the level. Didn't give you any chance here. And I couldn't take this. Oh, I wouldn't No, because I don't trade turtle soups. I don't do it. I don't do this type of turtle soup, right? Because it didn't run the low here, so I would have still been thinking um, um, bearish, even though it traded into here. And but you have that retracement there. All right, so I wouldn't have taken this here, but on a 5-minute, I'm almost certain that that looks a lot better on a 5-minute chart. And what is this news? Why did this run happen? Oh, I remember that. Actually, I took the short. I traded the short. I seen this happen and I traded the short, let out. And you can trade that utilizing the quarters of the, so you see it fell the 4-hour, fell the hold below the consequent encroachment. It also do quarters. So it didn't go up to the 50% mark. But yeah, but you have this violated fair value gap for your entry. And yeah, so this is also, I think I said that already. This is a sell model too, right? On the 5-minute chart. All right. Thanks for listening. Please like, comment, subscribe. Just kind of let me know how I can better serve the community. All right. Till next time. Be well.